Good morning. Welcome to Stock Market Today. It's Wednesday, December 11th, 2019, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at Dan Russo _CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where we get a lot of the content for this show, as well as give you daily stock ideas to consider in your inbox every trading day before the market opens. So U.S. equities finished mostly lower in quiet Tuesday's trading as U.S.-China trade negotiations remain the key story for the markets. REITs, materials, and comm services underperformed while healthcare and energy outperformed. Treasuries were mostly weaker with the curve flattening. The dollar was stronger versus the yen, but weaker on the euro cross. Gold finished up 20 basis points and WTI crude settled up 40 basis points. Remember, crude had a monster week last week, up over 7%. As we get to the desk this morning, futures are flat to slightly higher in front of the Fed meeting today, which is widely expected to be a non-event. Asian equities were mostly higher overnight. European markets are narrowly mixed. Treasuries are stronger with some curve steepening. Dollar is slightly stronger against the euro, slightly weaker against the yen. Gold is up 20 basis points and WTI crude is off 20 basis points to get us going on a Wednesday morning. I wish there was more to say, but there really isn't. Stocks grind below the highs as trade remains in focus. There's not a lot to update here of late, right? We've outlined the near-term support in the 30.30 to 30.50 area, stronger support down below that at 3,000. As long as we're above that level, it makes sense to remain bullish and kind of start to think about what are the odds that we continue to move higher. Well, we still think the odds are good that we continue to move higher because the RSI is holding in bullish ranges and Chaikin money flow is bullish. If we add to that, power bar ratio, which we're going to look at later, remains bullish, right? Near-term resistance at the pre-Thanksgiving highs around 31.50, but I do ultimately think that we head higher, and the breakout from the range still targets 3,200. So from a day-to-day basis, not a lot has changed, and that's fine, right? There are some days where you just don't have anything to do, and I feel like we're in that kind of environment right there. You continue to build your watch lists, look for potential opportunities, leading stocks and leading areas of the market. From a market perspective, though, not a ton has changed. Wake me up when we're through 31.50 or we're trading back down in this zone. Take a look at the market in a minute now. What am I writing about in our note today to Chaikin Analytics clients? Well, we're churning below the highs as focus remains on trade. We've hit on that. Sentiment is actually becoming less greedy despite the market trading near highs, and I think that could provide a tailwind into the end of the year. IWM continues to hold the breakout level and is now on the verge of leadership. When we look at relative performance for small caps versus large cap, they are actually on the verge of leadership as we look at it based on our look. And something that jumped out at me now, I actually took the analysis one step further, one step down the cap spectrum. Micro caps are starting to see their relative trend improve. So more and more areas of the market starting to get into gear with the bigger picture, right? Think about what a breakout in micro caps says about the market. We're going to take a look at that chart a little bit later. As I said, futures do point to a flat open here today. Let's take a look at the power bars now. Dow dips back into negative territory, 5 bulls for 6 bears after losing 10 basis points yesterday. S&P 500 down 10 basis points, 117 to 86, bulls to bears. NASDAQ down a similar amount, 27.17, bulls to bears. Small caps outperformed again. 717 to 266, bulls to bears, as small caps are on the verge of becoming leadership. According to the Chaikin Power Bar, small cap stocks and large cap stocks are bullish. Major indexes are mixed. Bonds were relatively flat on the day yesterday. Let's take a look at our stock of the day now. We've been talking about healthcare for a while, how it's improving, how certain areas of the healthcare sector are starting to look good. Take a look at a name like DaVita. DVA is the ticker symbol. Very bullish Chaikin Power Gauge rating for this stock that closed at 72.31, up 28 basis points yesterday. Power Gauge rating is very bullish due to strong earnings performance, very positive expert activity, and attractive financial metrics. Stock does have some weak near-term technicals, but I'm not going to argue that the technicals are weak. Maybe the volume is off, but I'm not going to argue that the technicals are weak here. Very bullish stock, strong trend, strong industry group above a rising long-term trend line, oversold, bullish money flow. Market and model are in agreement as the stock has been outperforming since early July. DaVita sets up for our process. This is a name that you want to take a look at, right? I realize that we've popped here, and a lot of people will say, well, Dan, isn't it up so much? Why would you want to buy it? Those of you who follow my work know that I believe in momentum and I believe in trend following. The trend is up. So what do we want to do? We want to look for opportunities where the stock becomes oversold within the context of that uptrend. Above a rising long-term trend line tells me the trend is up. Our overbought, oversold indicator tells me that the stock is oversold within the context of that uptrend. Market and model are in agreement, stock under accumulation based on money flow. What I see is a stock that's consolidating after gapping higher following a positive earnings announcement that now sets up for the next leg of the move. I think you want to take a look at a stock like DaVita, DVA, on the long side of the portfolio. It's a leading stock in a leading sector in a market that's moving higher. This is the process, folks, from the top down. Take a look at DaVita on the long side today. Let's look at our sector tracker now. Movement of the major sectors over the last 5 days, all green, so pointing in the right direction. And if you're bullish, which we are, cyclicals at the top of the list, defensives and bond proxies at the bottom of the list, with everything moving higher. Folks, this is what we're looking for, right? Trend in the market is higher. Near term, all of the sectors are moving higher, but the sector leadership is in the cyclical areas of the market, the areas of the market that signal risk-taking on the part of investors. Take a look at energy. Now, I'm not there yet on energy from a fundamental standpoint, but we can't argue with the fact that this is a cyclical sector of the market that's outperforming. Financials, you know our feeling on that. We've been bullish on financials now for the past couple of months as rates have started to move higher. We've warmed and warmed and warmed to financials to the point where we like them, and we're talking about them. And we, in particular, we like the banks because we think rates are going to continue to move higher. Technology has for a long time been one of our favorite sectors of the market. It's also one of the largest weights, or if not the largest weight in the S&P 500. So the right kind of leadership in the near term supporting the trend higher in equities. Take a look at healthcare, middle of the road. Everything else is moving higher, and we love seeing staples up, but at the bottom of this list. We love seeing utilities up, but at the bottom of this list. And we love seeing real estate up, but at the bottom of this list. It tells us that breadth is strong and leadership is in the right areas of the market. Taking a look at our industry in focus now, innovative tech services, which over the past 6 months has been a slight underperformer, lagging the S&P 500 by 2.64%. Its power bar ratio, which measures future potential, is slightly weak. 23 bullish or very bullish stocks for 27 bearish or very bearish stocks. It's currently ranked number 16 of 21 subsectors that we watch. Some of the indicative names there. This is an interesting one for me. We're going to take a look at the chart in a little while because I think it's a little more bifurcated than it looks. This is one where stock selection becomes important. And the names we want to avoid Snap with a very bearish rating. We want to avoid Okta, OKTA with a very bearish rating, and InterDigital, IDCC, also with a very bearish rating. These are the names we want to avoid. But there are 23 stocks in here that we could potentially want to look at. And here's why. Because it's more of a mixed bag than that previous slide portrayed. We have a bullish ETF power gauge rating. We actually have a strong trend above a rising long-term trend line. Money flow is bullish. Now, the relative strength has been dissipating of late, and it has been an underperformer for the most part since August. So that is a little bit of an issue. It's why it's a little more middle of the road. But I think that there are 23 names that are holdings of XITK, the fund that's in question, that we could start to look at for potential opportunities because bigger picture tech, we know, is strong. You've heard me talk about it ad nauseum. So stock selection is always important, but in a group like this, in this case, if I'm looking at XITK, I'd rather drill down on the stocks than own the ETFs, or I'd rather own a better tech ETF. Let's take a look at what's trending now. Yesterday's S&P 500 movers and shakers, our gainers and losers. AutoZone at the top of the list. Bullish stock up nearly 7% following their earnings announcement and an upgrade. NLOK, NLOK. Norton LifeLock, that is. Getting some takeover interest, up 3.5% yesterday. Advanced Auto Parts, AAP. was up yesterday. This is a bearish stock, was up 3% yesterday in sympathy with AutoZone. Didn't see any real news to drive Activision higher, 2.85% to the good. And Expedia, notable insider purchase, sent that stock higher by 2.8% yesterday. On the loser side of the board, Franklin Resources, Ben. It's not a resource company. It's an asset manager, and they announced their AUM numbers yesterday that disappointed the street. Mohawk, MHK, neutral stock, down 3.84%. Didn't see any real news there. CBOE is a bearish stock, down 3.29% after announcing that they are buying a clearing company in Europe. Netflix, down 3% after it catches a downgrade from my former firm, Needham & Company. Happen to know the analyst there who covers Netflix. I know her very well. And she does very good, thoughtful analysis. So if she's, I don't know the crux of her downgrade. I did not see her note. But if she's downgrading the stock, it was a decision that she probably didn't take lightly, and there's a lot of thorough analysis behind it. What I will note is that in the Chaikin model, we were already there. We've been bearish on Netflix for quite some time. CF caught a downgrade from Bernstein yesterday to send that stock lower by 3%. Let's take a look at what I'm talking about. Sentiment becoming less greedy. Here's that CBOE equity put call ratio. It's the 13-period moving average is the metric that we look at. I apologize for not labeling it there the way I normally do, but let's take a look at it here. Moving higher, right? So we had some frothy conditions about a month ago, overly exuberant bulls, led to a kind of near-term consolidation for the S&P 500. But as that consolidation takes place, and even after the big move on Friday, after the jobs number, we're becoming less greedy, right? Now, we're not in an area where it's outright fear, obviously, right? Such as what we were back in August, and definitely at the tail end last year. Look at a year ago. But it's kind of nice to see the market churning just under the highs and sentiment becoming less greedy. I think that that could potentially be a tailwind into the end of the year, right? If we were overly exuberant and this ratio was down here, such as it was back in early 2018, I'd be concerned. I'd be concerned about my view that we're going to rally into the end of the year. But we're not at those overly exuberant levels. We're actually starting to move in the other direction. I think that that's a near-term positive for the market into the end of the year. Add to that the fact that the VIX is going higher, right? About a week and a half ago, 2 weeks ago, we were down under 12. Now the VIX is kind of backed up a bit, closer to 16. So I'm not seeing that frothiness from a sentiment standpoint that would give me pause on my view that we could rally into the end of the year. I'm just not seeing it, right? I continue to think that ultimately we will break above through that 3150 level for the S&P 500, and I still think 3200 is in our sights. Why is that? Well, I don't see signs of risk off, right? We talked about the cyclical sectors leading the market higher. But when I see something like the micro caps on the verge of a key breakout, now they've broken this downtrend line that I've drawn here. This is the IWC, the iShares microcap ETF, breaking a downtrend line. To me, the key level is right around here, 97, 98. If we could break through that level, similar to what happened with the small caps, remember we were watching 160 for the IWM, that to me would be a sign of, number one, further risk-taking in the market. Number two, increasing breadth in the market as yet another area of the market begins to move higher. Take a look at IWC purely from a technical perspective. We're above the 200-day moving average, which is, in fairness, flat, but momentum is there, right? Notice that on these pullbacks here, we did not become oversold, and now the RSI has shifted into bullish ranges, actually becoming overbought with this most recent spike higher. And look at the bottom of the chart. Look at IWC relative to SPY. It's been in a clear downtrend since late February, early March, but we've broken that downtrend line to the upside and are now beginning to move higher. So similar to small caps, we're moving down the cap spectrum. Folks, people are taking on more risk, it seems. A breakout here would also lend a breadth confirmation. Take a look at IWC. And if you're looking for some smaller cap names, now that we think that that is an area of the market where you want to go hunting for ideas, take a look at a name like PC Connection, CNXN, which I'm featuring in my note today. After this strong move higher, we've gone into a consolidation that has worked off an overbought condition as the stock trades above a rising 200-day moving average. The RSI is holding above 50, so it's still in bullish ranges, and it's holding above the breakout, The stock is holding the breakout on a relative basis relative to the S&P 500. So as we move down the cap spectrum, this is the type of name you want to look at. This is a smaller cap stock. It's, about under $2 billion in market cap, but it's in that tech area, which we like. Take a look at PC Connection. I'll leave you with that. Have a great day, everybody. Check out the site for the email. I'll be back here on Friday.